The last time this happened was 2015 US dollar crashing here in recent trade. And you have to go back to 2015 to see what we're about to uncover here. But before that, I want to set the stage for how we're getting to these new lows in US dollar. And it's a funny thing, might seem oxymoronic, that inflation, something that when high means that the value of your currency is falling, inflation is the lowest it's been since 2021. The first time we've printed below 5% here in US core inflation in more than a year. Feels like it's under control, at least the most under control it's been in, like I say, the last year or so. And so you might think, well, that's a good thing for the value of my US dollars. And that is, relatively speaking, for the value of your US dollars relative to food and energy and clothing, consumer goods, services, and everything else. But the adverse effect that it's having on interest rates in the US, when we were above 5% in core inflation, and it was just 2 weeks ago that central bank Fed Chair Powell was saying, man, we're worried about this inflation for the next 6 months, the next 12 months and beyond. The idea was, oh man, they're going to need to hike 1 or 2 or more times, and they're going to keep interest rates here in the US higher for longer to quell that still above 5% inflation. Comes in lower than expected. Idea now, maybe we don't need to hike interest rates in the US as far as we had thought a couple of weeks ago. And you're seeing markets adjust. The odds for a second rate hike by the end of 2023 have gone from 36% chance. I mean, that's, of course, I'm maybe being a little hyperbolic, but that's almost 50-50 chance of a second rate hike. They're still pricing in 1 rate hike in the July meeting, a second rate hike by the end of the year, to now being, less than a standard deviation chance here, just 15% chance. So the chances get cut in half, now really looking like outside chance that they hike a second time. And to boot, all of those odds have poured into a potential rate cut if they do hike here in July by the end of 2023. So really seeing these shifts in interest rates. Now, that being said, still looking at 5%. That is, for the last decade, a high for US interest rates. Combine that with the global economy for inflation and interest rates, and you're seeing multi-year lows in US dollar here. You're seeing lows in dollar versus the pound versus the euro, and especially versus that Swiss franc. We have it here in front of you. Unbelievable price action going from parity against the Swiss franc not 12 months ago to 85 cents, 86 cents here today in the 85 handle at least. And you can see it's been a straight shot, an unbelievable move of about 5 pennies in the last 10-ish trading days here, US dollar falling against that Swiss franc. And you can see similar price action against the pound or the euro. I know that it's not often the most popular, but it is a major Forex pair and a major indicator of US dollar strength or weakness. And you're seeing here, as I add more data to the chart, the lowest value since 2015 for dollar versus the Swiss franc. And you go back to 2015, and we were here for, it's a flash, less than a month, were they below 86 cents. And so you have to really go back to about 2011, where they spent 4 months below this level in US dollar versus Swiss franc. So still, even back then, the last time we were significantly, below this price extreme that we're currently seeing, it was still only a handful of months. So really big price extreme here that we're seeing US dollar just depreciating like crazy against other major currencies. And you're also seeing that British pound get up to 132 against the US dollar. They were down at almost parity 7-8 months ago. Euro was below parity against the US dollar, back to 112, 113, depending on where you're looking. And just to highlight this point further, you can see the wild price action we've seen since September, October of last year. This is the pound versus the dollar now. A move from below $1 and a nickel, 105, all the way up to today, above 131. So 25 cents, more than 25 cents worth of action in less than a year here, essentially more than a 25% move in less than a year. And you've got a market here that usually shows a volatility close to 10%. So you could infer, historically speaking, that right now, and we're not even through the year, we're in July, seeing a 2 to 3 standard deviation move in almost every major pair, including the US dollar, from the lows of last year, where US dollar was moving through its highs, really appreciating against the rest of these currencies, as inflation was very high in the US, and people were thinking that the US was going to have to hike interest rates higher and higher. And if you don't know, just as a quick aside, interest rates a lot of times will drive demand for a currency. If the US was at the forefront of inflation like they were in 2022, interest rates rising in the US faster than the Eurozone, UK, Switzerland, then there was some greater demand for that US dollar relative to those other currencies. Now it seems like US inflation moving lower faster than those other economies. Maybe US interest rates don't have to get as high or stay high for as long as the Eurozone or UK. And so now US dollar being undone, it'll be really interesting to see how far this can get out of hand, as we're seeing such a crazy price extreme. And like I say, the lowest US dollar value since 2015.